Hello, I'm Michael Houston, CEO, and I'm here with my lovely wife, Tara Houston, who is the founder of Houston Consulting Group and Associates.
And we want to welcome you to our business empowerment series today.
Yes, welcome, welcome. Before we get started, because we have an awesome guest that we've known for a long time. Really
Mhm.
excited on talking with her.
We
Oh,
are.
and we are. We invite you to subscribe to our YouTube channel, and you can find us at Business Empowerment Series by HCG and Associates. Look us up on YouTube,
Mhm.
and make sure you click the subscribe button so you'll be notified of all of our upcoming editions. We've had some wonderful guests,
We
you
have.
know, that will surely
Yes.
inspire and empower
Wonderful.
you. That's
Mhm.
right. That's right. And you'll find this edition as well. Okay, so you'll get notified right away. So, but we're gonna go ahead and get started. So excited. Again, this young lady, we've known her for a long time. Our special guest, we've served with her, one of our strategic partners, and that's none other than Markita Woods, AKA.
The Queen of Mortgages.
That's
And
right.
she's a loan officer with American Financial Network. And we are so excited, Marquita, to have you on the series today. Marquita.
You're welcome.
Morning, good afternoon, all day, whatever it is. Thank you so much for having me on your show. I really appreciate the opportunity to share. I love what you all are doing. And again, like I said, I really appreciate the opportunity to be here with you today.
That is so
Yes,
awesome, Marquita.
yes.
And we love what you are doing.
Yes, we do.
Obviously follow you on social media. We work with you. You're, really our preferred lender. And we, just appreciate all you do for your clients. And we've known you. I mean, we know Marquita. We've known you for about 18 years,
Yeah,
I
more
think.
than I can
It may
count
have
on
been
two hands.
It's
Yeah, it's a
been
right.
a,
long
it's been
time.
a while.
All
It's
right, going on
definitely
two
been a
decades,
minute.
I think. Yeah.
Yeah.
Look, back when I was a loan officer, before I was an agent, that's how long it's been.
Yes, yes.
Right. So
Yeah.
we've known you a while. Of course, we know your husband, and he's an excellent business owner. So
Yes,
I
he
tell you,
is.
you just come with so much. So I hope we're gonna be able to
I,
condense all of
I,
this
I know,
into
I know. We be here all day. So,
exactly into one series.
yes.
So you're the queen of mortgages, and we know you're a great loan officer. You're outstanding. You're the best loan officer. But let's just start with your story a little bit because not see we've known you for like 18 years, so not everyone may not know your history because we I understand you started off playing basketball or something like that. You want to tell us
A
about?
little something like that. A little something like that. So I will first start off and say I am the self-appointed queen of mortgages. I just
Okay.
decided that on my actual own at the end
All
of the
right.
day. So I appreciate the kind words, but my journey didn't start anywhere near mortgages. I don't know too many people that even grow up and say, "Hey, mom, dad, I want to be a loan officer," right? Um, so as you mentioned, my background is actually I used to play professional basketball. I'm originally from Detroit. Still trying to figure out how I end up in Woodbridge, well, now Dumfries, Virginia, living here, going on 20 plus years now. And that all came about from the basketball journey. I went to school at UNC Charlotte on a full scholarship.
All right.
And as you
Awesome.
all know, during that time, or maybe not, because I'll be telling my age, there was no women's basketball in America.
Hmm.
Okay, so to play professionally and further your career, you actually had to go overseas to some of the other countries to actually play where they had women's professional sports. So my freshman year, I ended up tearing my ACL, which I don't know if people know that's your
Hmm.
anterior cruciate ligament. It's pretty much a career ender for some. But I
Right.
Mhm.
was very blessed and fortunate to be able to come back and actually be stronger. So that made me have to stay in school for an extra year. So I ended up going to college for 5 years instead of four, so I could play all 4 years of my eligibility. During that time, there was a basketball league that was actually started. And contrary to what people believe, it was not the WNBA. So the first true professional basketball league in America was called the American Basketball League. And there was actually a team right down in Richmond. The Richmond Rage was a team
Okay.
that came out.
Okay.
And
Okay.
basically, it was 100 of the best players in the country. I went through a tryout, so I wasn't drafted, so it wasn't like oh, coming to the stage, draft pick, whatever. I literally went through 3 days of grueling tryouts.
Hmm.
Got a call from one team that said, okay, if you're available in the second round, we're going to pick you. Well, let's just say the second round came and went. They never did pick me. So
Mhm.
I was a little bit crushed, but I wanted to continue to play because I just had a passion. I loved the game. So I wanted to further my career. And I was a little depressed for a little bit, but a week later, a letter came from a team out in Portland called the Portland Power. And they were like, hey, we want you to come out and play on our practice squad, right? So I was like, okay, basketball has practice squads now, but there's no guarantee you're going to make the team. We want you to come through training camp, and we'll see how it goes from there. So went out there literally on a one-way ticket on Southwest Airlines. One way, because I was a broke college student. I just graduated. I don't have no money, have no job. Athletes can't work. So went out there on a one-way ticket with my Reebok pumps and all of my age right now.
Yeah, I remember the Reebok pumps. I remember them.
You know what I'm saying? I pumped up the little orange ball on the sneakers and went to work. And that's where my career actually started. Well, of course, the ABL was sponsored by Reebok and some guys from Stanford alumni. Well, you can't have the NBA being the best league in the world not have a sister component now that these people are making them look bad. Right. So made it through a year with the ABL. That following summer, the WNBA was actually formed. So so the WNBA and the ABL were around. And unfortunately, there's really not enough room for two women's professional leagues in America. So the ABL ended up trying to keep the pressure stay alive as long as they could. The WNBA had landed some big names at the time, the Rebecca Lobos and Lisa Leslie's of the world at that time. Yeah. So the ABL ended up closing their doors and literally was home for Christmas break because it ran through a regular basketball season. The WNBA actually is during the summer. And that's a good marketing reason for that because there's no real sports going on in the summer as far as basketball. So that was a way to pull the true basketball fan in. So again, I was not drafted. So bummer, right? I'm like, when are they gonna know I got this? So I went to, tryouts. I was invited to two different tryouts. One was the New York Liberty. And then the other one was the team in Washington, which, basketball and all these things become a small world. The team in Washington was a coach that I was going to go to school there at Ohio State. So I came down to the last minute, the decision of, UNC Charlotte versus Ohio State. And at 18, you don't know, what you're doing, making a decision about college. I happened to be the first one in my family to go to college. So there wasn't a lot of guidance about what I should do. And I'm 18 making this decision based off of probably all of the wrong factors. I went with the weather. I'm like, hey, I'm already from Detroit.
Right, exactly.
Right. I've seen enough snow for a lifetime. I don't need to be doing this anymore.
That's right.
So chose to go to UNC Charlotte. Fast forward, I go to the tryout in New York and it's Madison Square Garden. I mean, come on. It's nostalgic, right? Right. I was just taken aback, but I was on the Garden floor. So I did not have the best of tryouts. I mean, I literally was running back on defense and you would have thought the floor just grabbed and tripped me. I fell, girl crossed me over. It was pretty bad at the end of the day. So I knew I only had one more shot to make the team. The next day was the tryout in Washington. So after New York, we drove down to DC and there were 100 players for 5 spots. To be on that team to come into the training camp. And I was one of the 5 and started my career with the Mystics. Went through the training camp and made it onto the roster. And I played for the Mystics for the next 3 years. So played professionally 5 years total, played 3 years with the Mystics and ended up getting injured to start the next season. Had a little hamstring pull. And I say a little hamstring pull, but these are the type of injuries that are naggers. Like you can't really heal unless you actually rest. But here I am competing for a spot on the team. So just didn't have the best of training camp. And we decided to part directions at that time. And personally for me, it was like, hey, at this point I had to decide, whether I wanted to, go overseas and come back and try to play the following season or whether I just wanted to move on. But growing up, I always had an interest in real estate. Always thought I was going to retire by 50. That's not going to happen, but I always thought,
only 25.
Another decade.
Listen, we've been aging well, but I appreciate it, but no, ma'am. So I always had an interest in real estate. So I
Yeah.
actually went to real estate school and got my real estate license.
Mhm.
And I did one transaction. At the time, it was a veteran couple that were buying a home in the Woodbridge area, which
Okay.
subsequently I knew nothing about because I had spent most of my time in DC and Arlington.
Right.
So I
Mhm.
had my MapQuest papers
Oh
and,
yeah,
took
MapQuest.
Oh,
them
I
Oh
out.
yeah, I
remember
remember
that.
having to print it out.
Yeah, right. Yeah, no
I remember.
GPS, straight MapQuest. And they bought a home in Belmont Bay, which is
Right. Yeah.
right down Route 1 here. And they bought a home, but it was a company called Westar Mortgage that
Mm.
actually did their financing.
Okay.
Subsequently, my degree was in financial management. And although we made it successfully through the transaction, I found out quickly I wasn't cut out to be a real estate agent.
Mhm.
How does one who does not like to drive even think that they're going to embark on this journey?
Right. Right.
So, conversation with the owner of Westar came up about, hey, maybe you want to check out what we got going on over here. At that time, that was the height of the market, really was starting to boom, 2002. So we were seeing, double digit appreciation in months. We were seeing people that if you had a pulse, you could get a loan. So it was just happening really fast. So I
Yeah.
literally went to a 2-week training that they had, and they made us complete what was then called a good faith estimate, and that's basically the form with all your numbers by hand.
Yeah.
So if you could
Mhm.
complete that by hand, then they would hire you on as a loan officer, which that worked out perfectly. I love numbers, so I was able to do that, only to find out that it's actually a computer system that does it for you.
That's it.
So
Right. Yeah.
like I said, I showed up there, sweatsuit and all, during that 2-week training. Didn't have a whole bunch of clothes. 'Cause remember, I'm
Right.
coming
Right.
off the court, and that's where I started my career as a loan officer. I was mentored by Kathy Zempel, the owner of the company at that time, and yeah, I've been through the ups, downs, and everything else of it. We went through a market crash, so
Yeah.
it was almost like it was too easy in the beginning, right? So I didn't have to try to run a business like a business because if you were breathing, you could get a loan.
You
Right.
could,
Right.
So it
yeah,
didn't
That's
really
enter
right.
teach
that
me
market.
Right.
anything about sales,
Right.
about running a business, about having an entrepreneur spirit. However,
Right.
this is a job that is commission only. So
That's
yes, I don't own the company, but I do own, as far as I'm concerned, my book of business and what
that's
that
right.
really has
That's
means.
right.
So I started at that point looking into, hey, how can I stand out? How can I be marketable? How could I be brandable? How could I be someone people don't forget? And that's where the Queen of Mortgages was born. Um,
Awesome.
in 2008, I went to a mastermind with small business owners, and we were all coming up with, hey,
Mhm.
what kind of names can we come
Right.
up with? So
Right.
Queen of Mortgages ran over to GoDaddy and bought the domain name. And I will say the rest is history, but we're still making history.
That's
So
right. That's
Oh,
right. Well,
yeah.
I tell you, man, that is awesome. That is such an
Mhm.
awesome story. Just an amazing journey that you've had going from, getting a WNBA contract to now reviewing real estate contracts, and
Absolutely.
lending money, and so that's just an awesome story.
And I like the ebbs and flows of
Yes.
even your quest for professional basketball.
Yes.
What I hear in your story is, what it's like to have setbacks.
That's
You know
right.
what it's like to try something, think you're almost there, and bam, no, you didn't make the team. How is that so much like the loan process when you think about it?
Right.
Because sometimes we're right there, and then boom, this thing's on your credit, so you have to wait another year. You
Right.
know what I mean? So it's like you keep trying and you keep pushing, and
Right.
I'm sure when I listen to your story and I hear, the bumps, the bruises, you had some pains, you had some injuries, you
Right.
had all that stuff. That was your report in basketball. But when I listen to your story, I'm sure you can't help but have compassion for those who come to you and their credit reports sound like that. You know what I mean? They're like, well, I got laid off, and then, I couldn't pay my bills, or I, had this bump in my life. Maybe I got a divorce, or so there
Right.
has to be some compassion there based on your experience.
Absolutely. Absolutely. I definitely have empathy for clients that have gone through something. At the end of the day, there's a couple parts that from my basketball journey that I use every day in this business is that
Right.
One, being coachable, but also coaching people, right?
Right.
That have had a setback. We
Right.
never had a game where we played where we didn't have a coach. So I'm like, hey, I'm going to be your mortgage coach, throughout this journey.
Yeah.
That's part one. And part two of it was like, if you want it bad enough, then you can't give up. Yeah, you had a setback, but I'm
Right.
giving you the plan and I'm going to coach you to it. As long as you are coachable and you don't give up, then you can meet your expected end. The slam dunk for you will be getting into a home, even
Right.
if you've had some setbacks, right?
Right.
I mean, I personally had some setbacks because I did survive the market crash, and a lot of loan officers left the business and moved on. But at that point, for me, it was a time to, just to pivot, right? Another basketball thing, I had to pivot,
Right.
shift and, change the game plan and move forward from there.
Right.
So I definitely have empathy when those situations come up. The key thing that like I said, I have to tell people is that you do have to be coachable though.
Absolutely, absolutely. I mean, those are some great points and everything, and very valuable lessons that you learned from your basketball career that you transitioned and have applied right into your real estate career as a loan officer. And we've seen how just like you achieved the pinnacle of success in sports, the highest level, professional level, where you're getting paid to play with a game that you love. Yeah, I mean, you've reached the highest levels in real estate, being a loan officer. And so, talk a little bit about how you serve and consult business owners. I know you mentioned that you're connected with a small like a business small business group or whatever, and you came up with the branding of Queen of Mortgages. And we know you serve a lot of clients. You serve a lot of our clients, first time home buyers, move up buyers. But I know a lot of our audience, are business owners. They're independent contractors, real estate agents, and things like that. And sometimes it's really challenging for that niche market in terms of being able to get a loan. Maybe they're 1099, they're they have they earn their income in different ways than maybe those who are have traditional employment. So talk a little bit about how you serve business owners and how you really been able to carve out a successful niche and consulting business owners and helping them buy a home or property.
Absolutely. First, I want to apologize to business owners and entrepreneurs and 1099 people that are truly out here on the hustle. Some of the hardest working people I know. To start a business from the ground up takes, discipline, consistency. A lot of things can happen, ups, downs, sideways, but you got to keep moving forward. And I feel like overall as an industry, we have not served this community well. With the type of financing that we have. For the major mainstream, we have about 4 different loan programs that we use consistently, and all of them have some type of government backing or pseudo government backing, and they make all of these guidelines. And these guidelines do not really fit for the average business owner because, hey, you are a business owner and you do deserve the opportunity to take advantage of all of the tax laws that are out there. So what happens is the loan types are very black and white about what they are going to do as far as taxes and income. So yes, I have business owners that may have $1 million in gross receipts, but who wants to claim $1 million in gross receipts when you've earned the opportunity to take advantage of the tax code? Like somebody I know paid $750 for their taxes or something like that, and they had made millions. I can't. Why would I be mad at my everyday fellow man for trying to do the same thing and limit how much money they're giving to the IRS? So actually, these people are going to take the write-offs that are afforded to them for taking the risk to start their own business, which I feel like is really, if somebody didn't start a business, where would America be? Right? If we didn't have business owners. So we have not done overall too well as a community serving that community because we want to use your income after write-off. So the person that maybe has a gross receipts of $1 million or a 1099 at $600,000 after write-offs, that income may be $100,000 if they have a great CPA, and that totally makes sense, right? It's about keeping, what we earn versus actually giving it all away in tax consequences.
That's right.
And if that's legally and ethically you can do that.
Absolutely.
Why not?
Absolutely. So talk a little bit about, so for the business owner who wants to, buy a home or property, talk specifically as far as, what they really need to do to prepare to apply for and get pre-approved for a loan. Kind of, what's the differences between a business owner or a 1099 independent contractor and somebody who is, employed by a company and, W-2. So if you can talk specifically about that, because again,
Absolutely. So as I was stating, I don't feel like we've done a good job of serving this community. Typically, you're going to need, 2 years tax returns, and we're going to use the after write-off income.
Right.
Also, because of some of the overlays in the time we're in now, we do need a CPA letter as well as a profit and loss statement, right? Well, we already know that if you're doing it right, you most likely are going to write off your income. And that's going to hinder you as far as how much you possibly could qualify for. If you write down your income to 50,000, how can I say, I don't know if you really can afford this $400,000 house.
Right.
So we have some alternatives that have come into the market. There was one time where if you were self-employed, you would do a loan that would say stated income,
Right.
so you could state your income
Right.
based on your job. And if it made sense within those parameters, we didn't have to prove it.
Right.
So with our 4 loan types that are very conventional in the box, we always need the tax returns, and you need to at least be self-employed for 2 years to qualify. So you've had some new people come into the space since the market crash that
Right.
still want to be able to show the ability to repay, but also want to be able to help, self-employed people actually buy. So the alternative that we're using right now are called bank statement loans.
Mm-hmm.
And basically we are using your bank statements, your deposits as your income. Now there is an expense factor, factored into that, which they have a blanket number they can use. So if your deposits, average for the year are 300,000 and we're dividing that by 12, then that's going to be your income, monthly income to help you qualify. So the biggest thing is trying to find out an alternative means for someone to show their ability to repay. So you can use 12 to 24 months of bank statements, personal or business account. And what determines that really depends on how your business is set up, because some people are 1099 and use their personal accounts.
Right.
So we're going to look at the average, use that as an income, and then take an expense factor. If you have been keeping your books, then that expense factor actually can be lower as long as your CPA can verify that. So we will use that as actual income. Most people are going to need at least a 660 credit score. So you have to have the credit in order. You have some companies that will go down to a 600 score, but it's going to require a much larger down payment. So speaking of down payment, you're going to need a minimum of about 10% down. So that's the lowest that I've seen for a bank statement loan is a 10% down payment. The loans don't have mortgage insurance. So typically if you have a loan where you're not putting 20% down, or you're not a veteran, or you're buying in a rural area, you will have some form of mortgage insurance if you're not putting 20% down. So 10% down. And the one caveat, because it is somewhat of a risk, and these companies understand that they are flowing in a little niche market, is that the rates are higher. They're definitely higher than your average rates that you would see with those 4 different loan types that I was mentioning. But I still think it's a great opportunity for someone that wants to own a home that is self-employed to explore, right? So I'm probably going to scare or shock some people, but you think about it. I looked up some rates just for this call today, and 10% down, 680 score, 12 to 24 months bank statements, depending on how you have everything structured. The rate is 6%, right? So the rate is actually 6% for the bank statement loan. Yep, anywhere from 6 to 6.5% is showing up on the rate sheet. Well, we almost want to go, oh my God, that's so high, because we've seen all of these so-called record lows. Right. But when I started back in 2002, I tell people 7% and they didn't flinch. And then gave them a second mortgage with 10% on the back of it, the first and a second, and nobody flinched. So I think you have to think of it in context. Like for example, a house at 550,000, you put 10% down. Let's say the rate 6% is a 30-year fix. That payment is about $3,540 a month. Conversely, that same loan, conventional 550,000, 10% down. Once you add in the effective mortgage insurance rate, the payment, if you use the rate at 3.75, which I kind of pushed it up some since we are, in a rising rate climate during the time of this call, then that payment is $3,090. So, okay. Right? Because the mortgage insurance actually adds to the effective rate for a period of time, right? So $3,090 versus $3,540, let's just say it's a $500 difference. Right. But think of the person who says, okay, I want the payment at the $3,090. So now I'm going to go file my taxes, and I say, hey, well, you need to file 350,000 profit, to actually, qualify, or 200,000 in profit to qualify. And you start looking at what's my liability to the IRS. If that IRS liability was, let's just say you'd owe $100,000, right? So you have to decide, what do you want to do with the money, right? Do I want to put 10% down and have, 55,000 plus maybe pay my own closing costs? So let's just say 70,000. Do I want to pocket 30,000 of my money, pay a little bit of a higher interest rate, but start owning a home to help build that legacy part of, my American dream, right? So you have to just weigh the pros and cons. And, I always walk people through that, because I'm like, yeah, the rate is this because of this reason. However, how long is it going to take for you to break even on the $500 more that you're paying every month versus paying the IRS that additional $20,000, $30,000 versus buying a home?
Absolutely. But that is excellent logic. The way you teach that and train that, I see the coaching you coming out, because it's really coaching us and training us on how to think about the money that we're spending. And you're right, that mortgage insurance could be expensive. So the fact that you're not even paying that and you're getting into a home is just amazing. The way you can do it for business owners. Because I know real estate agents that I've talked to, and they're like, I'm out showing homes. And these are top producing agents. I'm not talking about somebody who does one deal a year or, this is a part-time gig. These are full-time, productive agents. And they're like, I'm showing homes and I'm selling homes, and I don't even know how I'll ever get into one like this, and I think it's because they haven't met you.
That's right. Right.
And there you go.
They don't know what they don't know.
They don't know what they don't know. We don't know. We don't know. We were on a call with you last week, and we learned so much about this from the business owner perspective. Exactly. This is just empowering information, very empowering. And so you said it's about 660 credit score, 10% down. And were you inferring that you can play with the credit score if you put more money down? Because a lot of business owners have cash.
Exactly. They absolutely have cash. So what happens, you need at least the 660. The higher the credit is, the lower the rate is actually going to be. And then if the credit drops below the 660 and the 600, still allow people to buy, but you're looking at probably a 25% down payment, which, like a lot of business owners still do have. And it's like, what do you actually want to do, with the money? And the fact that these lenders are offering 30-year fixed rates. Another way to kind of cut the rate down is to look into a 5 to 7 year ARM. Sometimes I just don't recommend it, because if there's no true exit strategy, like, when you go into the investment of buying a house, you also have to have an exit strategy. Is this the forever home? Is this, I'm staying here for 5 years and then I'm going to move up? So, we broach those conversations by each person's specific scenario.
Absolutely. Well, this has been valuable information, Markita. We can go on, and we know you serve, not just business professionals, but those who may be looking to buy a home for the first time or moving up. You refinancing. Great, time to look at refinancing. If you bought several years ago and you're sitting on that 5 or 6 or 7%, if it was a long time ago, great time to reach out to Queen of Mortgages to see if you can shave off some money off your monthly payment. But this has been awesome, and I just before we wrap up, share with our listeners here, where you serve. I know we know you're here in the DMV area, but what markets do you serve, even around the country?
Oh, right now I am licensed in Virginia, Maryland, and DC, and Georgia. So if you're looking further south, you're tired of the traffic of the DMV. So I'm also licensed in Georgia. And although our company is licensed in 48 of the 50 states, if you're moving there, I can still guide you on a referral basis. So don't, you still can reach out to get some help that way. And basically that's it. I help everybody that I possibly can. If it's something that's outside my wheelhouse, then I typically do have someone in my Rolodex that I can refer. But yeah, first time buyers, move up buyers, investors, self-employed, we're here for it.
Are you in North Carolina?
Not yet. Not yet personally. So I still can help that from a referral basis. So I can definitely help in that, but I haven't got the specific license because I just haven't had the time to put in the work. So they have some more stringent requirements, but I do plan to just actually add that on as an actual license where it's not having to be a referral basis, because I still have, I went to UNC Charlotte, so I still have a lot of people that I've connected with
Absolutely.
on social media that reach out often. I got a message this morning from my friend's brother who lives in Georgia, so we'll see how we can help him once we get off this call.
Good.
Yeah, but
No, that's good. The only reason why I was asking
Yes.
about North Carolina is just is so many people moving there. It's becoming such a hotbed. So it's good to know at least you can refer. That's helpful.
Yes.
So that's very
and that you stay involved in the process. You know,
exactly.
That's wonderful. I tell you what, this has been awesome. This has been a great
It
wealth
has.
of information. And I tell you, you know, going from WNBA professional basketball player to now loan officer extraordinaire, the queen of mortgages. You know, we love your story. It's definitely something that's going to empower and inspire our listeners. It surely has, you know, for us. I mean, we've learned more about you that we didn't know.
And we have a little saying when it comes to Markita, when people come to us and they're thinking about it, we say, you know what, check out Markita and give her a shot at the basket.
Yes, indeed.
I love it. I love it.
Yes. A high percentage, you know, so yes, indeed.
Give her a
I love it.
Yes, indeed. Yeah, but she's great and everything. But no, thank you for spending the time with us, Markita, on our business empowerment series. We appreciate you. And again, your information will be here. Just check her out. Her information's right here in this post. But again,
thank you.
Thank you. And to your
You're welcome. And like I said, I humbly appreciate you all having me on, and you know, look forward to moving forward together. You know, look, slam dunking some more deals out here.
That's right. That's right. And building legacies. Awesome. Awesome. All right. Well, great. Again, check us out on our YouTube channel, Business Empowerment Series by HCG and Associates. Make sure you subscribe, check out this edition as well as some of our past editions, and stay tuned for the next one. All right. Take care, Markita.
All right, Markita.
Thank you.